Thanks for clicking. The Bank of Canada has released its monetary policy report with a number of predictions for Canada's housing market and Canada's economy as a whole. With the Bank of Canada just announcing the biggest rate hike since 1998 and Canadian real estate prices plunging across the country, many are questioning the extent to which further rate hikes will continue to impact the housing market going forward.
Gonna be a bumpy one.
So what I want to do today is go over the monetary policy report, looking at its predictions for Canada's real estate market over the next few years. Then I want to take a look at the 2021 report from this point in time last year and see how their predictions fared since then. Then we'll take a look at what to look for next. Speaking of next, we are expecting to receive Canada's inflation rate on Wednesday, which will have a big impact on the bank's rate decisions going forward. We'll obviously have updates out on that inflation rate on this channel. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into this report. The Monetary Policy Report begins by predicting that Canada will continue to see housing declines, both in terms of new homes and resales, for the remainder of 2022 and into 2023. The bank predicts that as pandemic-related demand for larger houses continues to wane, and we see a rise in the cost of borrowing vis-a-vis interest rate hikes, prices and sales will continue to decline. With that said, the bank argues that housing activity and price growth should stabilize due to population and income growth later in the projection horizon, or between 6 and 8 quarters, 1.5 to 2 years. So while the bank says that housing prices are going to continue to fall well into 2023, we should see them start to stabilize by the end of 2023 into 2024. And it's good to note that they say stabilize, not reverse. So the Bank of Canada says that the bleeding should stop, but we're not going to see a return to the double-digit month-over-month, year-over-year growth that we saw during the pandemic.
You bleed this shit.
With that said, while the Bank of Canada notes that there will be a sizable pullback in real estate prices in its base case scenario, it does note that the pullback could be larger than anticipated. The report says that should there be a drop in home buyer sentiment, we could see an even further pullback and even bigger reduction in house prices going forward. Under the risks section, the Monetary Policy Report says that should our house prices decline significantly, we could see a major problem with access to credit and a major reduction in household wealth, which would put even more downward pressure on our house prices. So, in summary, the report says that we should continue to see price declines well into 2023, but they should stabilize by the latter half of 2023 or early in 2024.
It'll be spring soon.
However, it does note that there is a risk that our housing prices will fall even more than anticipated, and when they fall, it will put more pressure on the banks, which will be less likely to extend credit, which could put even more pressure on our house prices. This is just part of their risks section, but definitely something to keep in mind going forward. So those are the bank's predictions for 2022, but what did they say in 2021? This time last year, in 2021's Monetary Policy Report, the focus was all on the pandemic, with very little mention of interest rates.
What I wouldn't give to go back to that day, my lord.
The report in 2021 argued that as vaccines were rolled out, demand would slow and supply would increase, leading to a slowdown in prices. As such, last year the bank predicted that over time we would see a gradual waning of the pandemic and a gradual moderation of housing activity. It's worth noting that in last year's Monetary Policy Report there were only 3 mentions of interest rates throughout the entire report, whereas this year we have 17 mentions of the interest rate hikes that we've been seeing. So clearly there's been a major shift in focus on the part of the Bank of Canada. The bank, however, did note last year that there was a risk of a more pronounced housing correction. But again, most of that risk of a more severe housing correction was pandemic related, shifting preferences, etc. So clearly in 2021, the Bank of Canada thought that it was going to be pandemic related shifts that led to a slowdown in our housing prices. With that said, the bank did not foresee that it would be raising interest rates to the level that they have thus far.
Remain committed to holding the interest rate at the effective lower bound until economic slack is absorbed so that the 2% inflation target is sustainably achieved. Based on the bank's latest projection, this is now expected to happen sometime in the second half of 2022.
So clearly, the Bank of Canada's predictions are not always correct, and as with any predictions for the housing market, for the interest rate policy, and for inflation, we need to take it with a grain of salt.
We're in an environment where forecasting is really difficult. We went through a pandemic, and then we're in a war. Either of those two shocks to the economy would have complicated forecasting. The combination of the two has more than and doubled that difficulty.
With that said, if higher interest rates lead to lower housing prices, and judging from the evidence, we note that they do, and if the Bank of Canada is going to continue to raise rates for the foreseeable future, then it's probably a fairly safe bet that we'll see continual downward pressure on those prices for those next 6, 9, 12 months ahead. So I do think that this is a fairly safe bet on the Bank of Canada's predictions, but like we said, and as the last few years have proven, we never know what's going to happen going forward. We will continue to have updates out on Canada's real estate prices, on the Bank of Canada's rates, and our inflation rate. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.